right, thank you. Good morning, everyone. I'm Amir Adnani, founder and CEO of Uranium Energy Corp. As just mentioned, please come and visit us at booth 626, because it's only 10 minutes and there's a lot to cover with nuclear these days. I'll do my best. Uranium Energy today is the largest and fastest growing American uranium company, and nuclear energy really could not be better positioned. It's just a tremendous, immense opportunity with nuclear power that we're seeing today. We're in the early innings. If you said to me with nuclear power, we would have a ban on Russian uranium imports, we would have a supply deficit, we would have Microsoft and Amazon and Google all investing in nuclear energy, and there's a shortage of uranium, guess the uranium price, I would have said a couple of $100 a pound. But we're at $75 a pound. There's an interesting crystal ball in the nuclear industry, and it's called the fuel cycle, right? Behind every nuclear reactor, there's a fuel cycle. And the fuel cycle starts with uranium, then it goes to conversion, and then it goes to enrichment. There's a crystal ball here for us with the uranium price. If we look at conversion enrichment prices, they're at an all-time high. When utilities panic, what's the first thing they buy? They buy the service they need the most immediately, and that's enrichment. And so uranium ends up becoming a laggard when you think about the movements and the fuel cycle. And so if we think about where the uranium price should be heading in the coming year or years, it's really to its previous highs, which is about $150 a pound. And on an inflation-adjusted basis, that'd be about $200 per pound. So the setup for the macro is very positive. We're going to talk more about it this afternoon. I think I'm on the main stage talking about the macro with Jay at around 4 p.m. So please come and visit us there. But listen, this could not be a better time to be a U.S. uranium company, bring it on production in the U.S. We all know what's happening tomorrow. What's happening tomorrow, everyone? Trump is coming in, it's inauguration, and it's an America First policy. It's about redomesticating many things, including strategic critical metals like uranium. How much uranium does the U.S. import right now? Almost 99% of requirements are being imported, practically everything. And so that's why we're seeing this tremendous bipartisan support in Washington from a policy point of view to get the nuclear fuel cycle going in the U.S., make sure that the U.S. has enough uranium, conversion, enrichment, for all those nuclear reactors that power 1 in every 5 homes in America. So nuclear plays a big role. But nuclear now also has to power data centers. We'll talk more about that at 4 p.m. UEC, one of the big things about the way we're differentiated and positioned is that, again, as I mentioned, we've got U.S. production that has already started. We started uranium mining in Wyoming last August. We're building a second mine as we speak in South Texas, and in a couple of years we'll bring a second mine online in Wyoming. How are we able to do that? We control fully permitted projects. One of the key issues in uranium mine development today is there's many projects, but there's no permits. Uranium price could be $300 a pound. If you don't have permits to build and operate and produce, it doesn't mean anything. We have 3 fully permitted processing plants for in-situ recovery. We have 9 fully permitted mines, not 1, not 2, not 3, 9 fully permitted mines in Texas and Wyoming. We do believe longer term there's tremendous potential in Athabasca Basin of Canada. Hence, we've also taken advantage of acquiring assets near the bottom of the cycle. We'll talk about Canada. But we've done $1 billion worth of acquisitions. And we did that when the uranium price was $20, $30, $40 per pound. So the way I like to think about it is when the uranium price was very low, our company, we thought of ourselves as Vikings, right? We went out there and we were just grabbing stuff, just capturing things, buying assets on the cheap. Now at $75 uranium and going higher, we're kind of hanging up our boots. We're thinking of ourselves as farmers, right? We're going to start to harvest this massive portfolio that we have put together, positioning us really as the largest American uranium company. No other company did $1 billion of uranium acquisitions. Here's the other next thing. We're unhedged. We're putting our money where our mouth is. We're not signing contracts with utilities that want to see ceilings and floors, basically hedging in the uranium price. You look at some of the other producers out there, they've signed long-term contracts that
basically puts a ceiling on the price they can capture at $70 a pound. Well, if you believe in what I just said earlier about the fact that uranium could go to $150 or $200 a pound, why would you put a ceiling in place? You and I know why the utilities want a ceiling in place. They want to protect price volatility. But for us, as investors, as entrepreneurs, as founders, we want to capture what this uranium bull market has to offer. And I think it's got a lot to offer. I've been coming to this conference, listening to guys like Rick Rule and all the great speakers that come here, Marin Katusa, for years, right? And you know, these guys told us all one thing. I remember Rick telling me, Amir, in the commodity business, there'll be some good years and there'll be some bad years. Maybe you'll have 3 good years and then it'll be followed by 3 bad years. Commodity market, cyclical, right? And then, you know, in the uranium business, I've been doing this for 20 years now in the uranium business. We've had cumulative 18 bad years and 2 good years. That doesn't seem like a normal commodity cycle, right? So this cycle that's in front of us, which is one where we're coming out of a 15-year bear market, should really be the mother of all bull markets we're going to see for uranium, and I think any commodity, because we were in such a deep, difficult winter for this commodity. When you look at the balance sheet, one of the things that, again, makes UEC, I think, very attractive is we have no debt. We're producing uranium, we're building mines, and we're doing it all with the very strong balance sheet that we had, over $350 million of liquid assets, including physical uranium. So no debt, unhedged, US production, and even a portfolio of Canadian assets to bring additional production on later. Key point here, we have 1 billion pounds of uranium deficit globally to the end of 2040, so over the next 15 years. So the market is physically short. That's the key thing. And we're seeing pledges globally to triple nuclear power. China's leading the way, but now the US is joining with small modular reactors. And at the center of everything is really uranium. At the center of everything we've seen in the last 6 months are companies that can produce uranium. And come and talk to me at the booth, come to the 4 p.m. talk and listen to this. But would you have ever thought that Microsoft would invest in 3 Mile Island to restart that reactor? I mean, if that doesn't say nuclear is back, I don't know what will. And it's not just Microsoft, it's every hyperscaler out there, including as well the Department of Energy, US government. And so again, when you add it all up, you realize that nuclear used to really be hated. Honestly, they used to treat nuclear energy like it was part of tobacco industry and prostitution. That's how bad it was to be in the nuclear industry. But now it's truly being embraced as this reliable, clean source of power, and the companies with the biggest amount of capital out there, the hyperscalers, that's the Max 7, where they're investing in nuclear. This is just unprecedented. This just shows you where UEC was making its acquisitions, truly at the bottom of the cycle. And again, that's, I think, how you create value in the resource sector as a company. Buy when the sector's out of favor, buy assets when you can do it on 10 cents on the dollar, and then grow. Late last year, we also made yet another acquisition of Rio Tinto's US uranium assets. When you look at the portfolio today, another thing about UEC, another differentiator, is we're highly diversified. We're not a single asset company. It's not a one-trick pony. We've got projects in Texas, Wyoming, and Saskatchewan that are in our development pipeline, part of our production pillars that we talk about. But we also have a very large portfolio of exploration assets that really drives the business forward and the staged production growth that we have. One thing I should highlight here to you, when you look at this, again, no other company has put together this much licensed and infrastructure capacity in the US. We are the largest uranium company in the US by resource, by license capacity, by infrastructure, by production capability. And we think that's really strategic right now. It's very strategic with the president coming in tomorrow and really prioritizing domestic production. And I think US produced pounds are going to be a premium product. We're already seeing that. There's a premium on a pound of uranium that you can buy on US soil than if it's produced in anywhere else on the planet, including Canada, which unfortunately, I had to say it, as we get tariffs coming at us tomorrow, starting tomorrow, right? 1 p.m., tariffs are coming. That's going to hurt the ability of even Canadian mines to be as competitive and selling into the biggest market in the planet, which is the US. So our situation and setup after 20 years of being in the making, right? This company is 20 years in the making to be in the position where I think we get maximum alignment of all the stars. So, and again, we've got a lot of slides to go through here. We're out of time. That's why you're going to come to the booth, hopefully, and interact with us this afternoon at the 4 p.m. Talk that I'll be doing with Jay Martin. But really, when you look at this in summary with UEC, you've got unhedged production, you've got a clean balance sheet with no debt, we've got multiple sources of production in the U.S. coming online. A year ago, we sold uranium to the Department of Energy. Don't forget, the U.S. government has set up the Strategic Uranium Reserve. They buy uranium at a 20% premium. That's what they paid us at the time to stockpile uranium for the government account. We've never seen something like this. The fundamental backdrop here is the best, arguably ever, for uranium, for nuclear power. It's a dangerous world out there, so I think political risk and geopolitical risk really matters. And so to be situated in the way we are with the U.S. assets, Canadian projects for future growth, and the second largest resource base in North America after only Cameco. They're the big dog in Canada, but we're the big dog in the US. That's where we want to be. But remember, the uranium stocks have not made their move yet because the uranium price is only at 50% of its all-time high. And it's going to that all-time high, and I believe it will take out that all-time high. So please come and talk to us more if you're interested to learn about all of this, and thank you for your time this morning.